Recording.
This is Market Week Live, August 15th, 2025. Information and support for traders and investors. Welcome, everybody. We have a lot of people coming into the room. Of course, people that are our members are coming in right now and they'll participate in our chat. And for those of you that are brand new, welcome. Thanks for coming. And I know that a lot of you are watching out on YouTube, so I really appreciate you coming to watch our show, which I think you're going to find extremely interesting today. So let's move on. What we're going to do today, coming up in this show, we'll have our level 4, well, 1 to 4 members asking questions in the Q&A. Again, if you become a level 4, 1 to 4 member, you will be able to participate in this Q&A, ask questions, so we encourage you to do so. Matt is then going to bring a review of our next level of our day trader service, Day Trader 3.0, and I got a big wow on that because it is a wow. Great updates on this, and he's going to show that to you coming up. And then I'll bring you analysis, some of the evidence analysis with our probabilistic projections in price and time. SPX, NDX, RUT, that's what I'm showing today. And you'll see our proprietary studies, and I'll bring you our market condition monitor, which is just a great way to see how our algorithms are putting it all together for some of the evidence market conditions. So you'll be able to enjoy seeing that also. If you're brand new, do get acquainted. Just sign up in our free stuff up in the top of the page for SIR Lite. Matt is going to bring you his analysis on the S&P 500 every day. No cost to you, no credit card. On YouTube, subscribe to our channel. Click the notification bell. Like this video. Give us a thumbs up on X. Follow me at askSlim. And again, any questions, write to Matt at askSlim.com. This, of course, is our legal information, and it just says that no matter how we bring information to you, it's for entertainment and educational purposes, and you should always discuss this with your investment advisors, or also please do look at your own trading plan. How to contact us? Well, if you have membership issues or website issues, write to team@askSlim.com. Also, anything regarding our commentary or feedback on anything we present, or our new Slim AI, which is just outstanding. I'll speak about that in a moment. And any questions you have on content, education, analysis. First-time specials or upgrades, write to Matt at askSlim.com. Today's host, well, we have our whole analytical team here today. We've been at this for like 100 years together. We've, Matt and I have been together for a couple of decades. Arvi and I are pretty similar. Katie and I part of the group for the last few years. You see her great analysis, and now doing more and more on long-term analysis for investors. We'll be bringing forth some new things on that also for those people interested in longer-term holdings. All right, let's get into our Q&A. Anybody who is here from our a group of members 1 to 4, you could put questions in there. We'll spend about 10 or 15 minutes at this, and then we will then go to look at the stock market analysis in just a little bit. So if you ask any questions about the stock market, then I'll be answering those hopefully towards the end of the show. In the meantime, you could put in questions on specific stocks or on futures. I see I'm going to handle the futures, and for me, I see there is a question there on natural gas. That's the only one I see there in the futures category. And we have IONQ, we have Tesla, MSTR, and VVIX. I don't have anything on VVIX. I don't know if the rest of the team does. So I have a feeling we're not going to be able to answer that one. So any other questions, put those up in the next 5 minutes, and then we will move forward. So I'm going to take a look first as we look at the chart on natural gas. Anything else here? And the bond market, I see Regis just put in ZBs. Whenever I look at the bond market, I also like to look at the yield charts because I think I get a lot of information off of that. So let's switch over. There's our MCM. I'll come back to that in a moment. And let's go over to the natural gas chart, NG. And here we have weekly on the left and daily on the right. For those of you that are brand new, we're cycle analysts. We look at the market rhythms. And that is the essentially heartbeat of the market. That's money flows seen in a visual way. And what we try to do is then project using not only these money flows, but our indicators, which are momentum indicators and support and resistance levels to help us get a good idea. So when you look at this natural gas chart, you could see really very, very good cycles that appear in here. The brackets that you see in the bottom, in this case, there are three cycles, three different periods available in each of those harmonic families. And that is giving you a good look at a dominant cycle, a minor half, and a really minor quarter cycle right there. And all of them have really good alignments. You can see that where two of the three were coming down here, that brought a correction. But the dominant one still obviously was giving an upward force because the low was higher. So you have a positively configured cycle. It suggests that the next rally is going to get to a higher high, and that's what happened. In this case, you have something different. You have this intermediate cycle right over there giving you a lower low. And being that the low broke right over here, we believed that the rally would fail in resistance, and you see that happened exactly. When the reversal scout then turned down right over there, and I'm going to zoom in a little closer for you to see, then that gave us the indication it was likely to decline into this period right in here. This is the cycle low timing. Katie does a great job. She has a cycle low timing tracker that she puts together with all of these dates. And so we were expecting that the natural gas market would decline into this time period. Then we say to ourselves, well, what will then end that decline? What would get us into that next? And you can see we have right there an indication of there's likely going to be an upward turn right over there. When it's gray like this, it just gives you a sense that we're kind of anticipating that right there, not up to any specific levels yet. But then when I look here at the daily chart, and you can see here that the daily chart was coming down into the same time period. So again, you could see the cyclic rhythms that are in there and how beautiful they are on the daily chart. Now here, what I'm going to add in is looking at, well, not only the reversal scout here, but the slim ribbon PO on the bottom. So the slim ribbon PO, the reversal scout, those are level 4 indicators for us. And the PO, you could see right over there, the slim ribbon PO, giving those signals of not only being red or negative, but also resumptions for the momentum, which are those down arrows. And you can see how extremely valuable that is. Look at the upward resumptions here on the green arrows, and you could see how the market moved back up. So this is a fantastic indicator. If you're interested in that, of course, write to Matt at askSlim.com. He'll tell you about the level 4 memberships. This is now, you could see a rising phase lining up here with the rising phase lining up here after this a minor and intermediate trough right there. So it troughs right over here, it troughs on the daily. So we're anticipating that there's going to be a bounce right there. And the question is, well, did the bounce start? You could see a few up days right in here, but none of this really gives us a sense it gets any good upside traction until the momentum tells us that it actually is improving. Momentum, of course, very negative here, and it's early. So for this to be turning up, look on the bottom here. You see this red dots down there? That's the option bias indicator. So if you were in an option position and you wanted to decide what your directional decisions are going to be, how you're going to bias your option positions, of course, this helps you with that and tells you that this is negative. Note there was a little bit of a whipsaw here where that turned green on that big upside spike, but within 2 days it turned neutral again. So that was kind of a warning. Occasionally you get something like that, but overall it's going to keep you on the correct side for your option positions. Bottom potentially forming right in here, bottom potentially forming right in there, and that is a good reason to believe that there's going to be some attempted upsides. So what we do is we take the distance between this peak here and the cycle trough right over here, assuming it's established, and then we create the resistance areas. The lowest resistance here is at a 38.2% retracement of this distance, and that brings you up to a potential of about 3.46. We'll give it up to about 3.65. That is where the potential bounce is. But if you look at this overall bigger pattern in here, it really says that there's a good possibility that there's going to be rallies that fail all the way out into February of 26. So here we're into this period of a minor rising phase, an intermediate rising phase on the weekly, fighting against negative conditions on the bigger pattern. That stops the rallies on the upside. That means if you were projecting an upside bounce and playing it, you would then respect the resistances here on the daily chart. So it gives you a good sense for how we use this information to come up with the sum of the evidence. And the sum of the evidence right now is that potential bounce up into this area, but overall in intermediate to longer term, it's not in great shape in the natural gas market. So I hope that was a good primer for you, a good introductory lesson there. We also got a question here on the bond market. I'm going to go to the, first I'm going to go to yields and go to TNX, and I'm looking at 10-year yields right here. So when I look at the 10-year yields, look at the cyclicality here. It is just absolutely beautiful, as you can see, each of those rhythms in there. So that gives me a good sense for a dominant and a minor cycle, and you can see how that lays out in here. Again, if you're brand new and you're not understanding cycle analysis, then please go to our top of our webpage to where it says workshops. There's a free video in there in the cycle analysis workshop and some other information, and you can start to learn more about cycle analysis. So this pattern is suggestive, if you believe in these beautiful rhythms, which certainly I do, that there's an intermediate low right over here coming, or a continued downward movement in yield that takes you somewhere out to first, second, third week of September. That should give you a lift in the bond market into that same time frame. If yields are going to fall, and of course we know that into that September period, it's very likely we're going to get a the Fed moving to cut interest rates at that point. I'll talk a little bit more about that in a moment. Then that's an indication that we should be getting a lift in the bond market into that September period. Let's take a look at the daily chart right over here, and you can see what's going on after this negative cycle right over there. It said, probably the next rally in yields would come into that area. You note in there that I had a note, and that is if yields popped up into this area, it's resistance and you buy treasuries. So that's what I had as the note to our members. And so it's gotten into this area for buying treasuries. So here's this area where there's a sink between the weekly and daily, and that says that yields should fall in here and the bond market should be moving up. So that's my analysis of yields. Now you asked me about ZB, Regis, so we'll take a look at the ZB here, which should be opposite of what I just said. In other words, where yields falling, bonds should be rallying. So right now bonds have been pretty much stalled in here. And this is kind of the upside target into this September period that we're talking about. So for the ZBs, this is 1602. This area right over here is about 1720. So that's my upside target for the next few weeks in there. If I look at the daily chart right here, then I look at the resistance right over here, that's 1704 right there, and an extreme level up over here around over 19. I have some doubts about it getting there. Here you could see there's overlapping or out of phase cyclical patterns in here. So cycles don't always line up on the harmonics perfectly. Sometimes you see cycles that are out of phase and they show up, and then we put them on the chart so that we can understand what's going on better. In this case, this says that there's probably a little downward motion right over here. This might give us a little bit of a buying opportunity, but then this rally out over here takes you into that mid-September period. So maybe it flounders in here, and then you get the rally up in here from the end of August into mid-September. If we got a break below this support level right over there at that low, that would warn me that something different was going on. And, right now it doesn't really look like that's really an issue. I'm just going to grab this line right over here so that I can put that in there, and you can see where that support is coming right across there. So you'd have to dip all the way down underneath that level to make me believe we weren't going to get the rally into September. I really don't think that's going to be the case. If anything, I could put in some supports in here that I think are a buy zone right there. So this right over here, it's already in the buy zone right there. I'm just going to duplicate this. And you can see where I'm putting in the buy zones right over here. Probably should have done this earlier, but I didn't know you were going to ask me about this today. So there you could see the buy zones right in there. And they were in there right now. Colors are not the way I like them perfectly, but not bad. Let's put that in there. Let me just fix this. Sorry I'm doing that all in front of you, but I like it to be neat. So there's your buy zone right over there. And I think that if we got a decline into this area, which we're already in, of course, that would be a pretty good spot. So I like what I'm seeing in here. I think the bond market is going to be moving up. Again, some of the evidence says that the pullback in here is occurring during a time frame where yields should be falling, so that this decline in the bond market is likely setting up an opportunity for a long side move into that period into mid-September. So that's the bond market. And that's the natural gas market. I took care of those. Let me see if I have any other questions for me before I turn this over. Jeff is asking a question on day trader service. You may note that, Matt, in case you're going to pick up on some of that when you explain the day trader coming up. So you could see that Jeff has a question in there. And DJV, you were asking me about IWM. I'm going to put up the RUT in just a little bit, and I'll be able to answer that question. And I'm going to turn this over to the team to look at two or three symbols that they had questions on.
All right, awesome. Let's go ahead and pop over Slim to the MSTR chart, and then I'm going to hand this off. All right, so this is not a good looking chart right here in MSTR. You can see that we formed our low back here, right? And then we moved back to new swing highs. But then after that, zero follow through, and then we have sold off. So at
I'm
this
not sure. I
point,
don't see your chart. I just want to make sure it's up.
not able to see. Let me
You,
see here.
you see
Yeah, I
it,
think it's
Katie?
there.
I'm seeing it.
Okay, good.
You just have to tab
Okay.
over.
Yeah, okay.
All right, cool. So, what I'll be looking for at this point, now that we actually have moved through this little low, is for a lower high to form, and then for this to really move down. You can see there is no low that is due here for another few months. Okay, on the shorter time frame chart, we did try to move through to new high ground here, failed, rolled over, and then a lower high that formed, and now a lower low versus this old low. So what really looks like the highest odds are, again, a lower high here to form, and then for this to roll back down into that trough that is due there, as you can see, and then one more lower high here, and then a low that forms when that next trough is due out here. Okay, so this is not a good chart at all, and we have this really on our short list in MSTR. Okay, and I'm
Uh,
going to go ahead and
there's
hand this out to you, Katie.
before you
Go
turn that
ahead. Go
over, a
ahead.
really
Yeah.
interesting thing about MSTR.
Yeah.
MSTR is really, strategy, MicroStrategy. It's all about Michael Saylor
Right.
buying
Right.
massive amounts of Bitcoin.
Hmm.
The problem is that Bitcoin has got a problem now. And Bitcoin's problem is Ethereum,
Right.
because once they passed the stablecoin bill, that meant that there could be massive amount of money transfers that on services that are built on Ethereum. And that kills any thought of any utility in Bitcoin. So Bitcoin is, if you believe in a store of value, then Bitcoin has value. But I think it just made a double top. And I think it's because Ethereum, I have no idea where Ethereum's going. I have no reason to be anything but bullish in Ethereum. But I think that Bitcoin has got a real problem. And I think that investors are seeing that and sneaking out of MSTR.
Exactly. Yeah. I agree with you.
Yeah,
Yeah. Very interesting chart.
yeah.
All right, Katie. I'll go ahead and hand this off to you.
Okay. Let me know when you can see the chart of Tesla.
Yep.
Got it.
All good.
Okay, great. So Tesla has been just moving sideways here for quite a few months. You've got kind of a wedge-shaped pattern forming, and we have a cycle trough that is due coming up. Let's see when this is, 9/29 to 11/7. And you can see that after we had this big move up into the middle of the resistance zone, that the momentum has just been waffling back and forth, positive now on the reversal scout. Still with this wedge formation, I've just got this projected down here into the top of the support zone, perhaps down into the middle. That's going to line up probably with earnings coming out. And let's switch over to the daily chart and I will zoom in. So we are about to enter the daily cycle timing window. We had a peak form here, really close to this 78.6% fib off of this move right here. And now we are already approaching the top of this support zone. So maybe we get down a little bit lower or even into the bottom of the support zone here before a move, another attempt to the upside. However, we have these two cycles here, which are in sync. What that means is that their troughs, for example, this one is due to have an ideal trough on October 6th, plus or minus about 3 days. And that time frame fits within this weekly cycle timing window. So these both are in sync cycles, and we could get a synced intermediate and short-term trough in either this first cycle right here at the end of this one or at the end of the next one. So this cycle, if it shows strength, then we would expect the intermediate trough and short-term trough to come with this one. However, it gets a little bit more questionable if this one also shows weakness. That doesn't mean that that is the intermediate trough. You could still see further weakness going out into that one. So it'll be important to watch both of these cycles and see where that intermediate trough does form, and Tesla should be able to do better at that time. The next one that I'm going to look at is IonQ, I believe is how you pronounce this. It is a company that's in the computer hardware category. And here we had a very steep decline, then a bounce back up to the 78.6% fib in this cycle that we're in now. It was not able to sustain a rally above that level. You can see it kept getting selling pressure here. And now we do have a weekly cycle timing window that's coming up between 9/29 and 11/7. Momentum has turned negative. So I have a projection here to the top of the support zone that is at 3708, perhaps down the middle of the support zone, 3341. So that is our initial target there. And if we look over at the daily chart, You can see that it tried to get back up to those prior cycle peaks. These are lower highs that are forming. And so here is an in-sync cycle. This is 923 to 10.2. And basically the cycle low support down to this level right here is that support zone from the weekly chart, and that is where we are projecting. So, we've got momentum switching back and forth in here, but generally as it moves sideways here, eventually we would expect it to be able to achieve these levels down on the short side. Someone asked for Intel. Zoom in here. Intel just had a giant move up this week towards the 78.6% fib of this move right here. And so with quite a while to go left in the cycle, I've got a projection out back over to that prior cycle peak, 27.55. And who knows, maybe it can get even higher than that. Our timing window is a little bit later than a lot of the other ones that we're looking at. This one runs 11:17 to 12:26. Over on the daily chart, you can see just this sideways movement here. We've got quite a range going. And this big pop up has positive momentum now. Here's that 78.6% fib from the weekly chart. Our next level up in this cycle would be $26.41. That is this prior cycle peak from back in March. And then there is the other one at 27.55. So looking for a little bit higher in here, some kind of a retracement in this timing window, 9.4 to 9.12, and then further up. We did have a couple of chart requests come in yesterday, and that would be OIH, which was a monthly cycle request, monthly and intermediate. So what I have down here is this black cycle is OIH, and I have overlaid the crude oil cycle. So you can see that this crude oil cycle really does have an effect here. It makes kind of a dip with the crude oil trough. Same thing here, same thing here. And then we got the cycle trough, the most recent cycle trough of OIH just here. So we are moving up. We have not been able to switch to positive momentum yet. This is still pretty weak. And we have a crude oil that has an ideal cycle trough coming up in the late winter, perhaps beginning of next year timeframe. So this may not be able to make much traction on the long-term chart, and that is why I've kind of got this flat projection level. If it is able to make some upside move, then it might be out when crude oil starts to have a rising phase. So the top of this resistance zone here would be at 291.35, but that's looking more likely for the later part of the cycle. The intermediate, let me zoom in here. And you can see we've already had a switch over to negative momentum. No levels have been violated here. This is just kind of sideways movement. If you want to look over at the daily chart is where you can really see the weakness that's starting to develop. We got down back over to this cycle low support here, move up into the sell zone, the resistance zone here, just still moving sideways. So this is looks like it's going to shape up to be either a negatively configured cycle or at least neutral. So there is weakness that is starting to develop in here. So if OIH is not able to recover, then we're just going to see some downward movement in here. And that is why this long-term chart may not be able to show much improvement for quite a while. And the other one is in a similar category, XOP, oil and gas sector ETF. Again, I have XOP as the black cycle bracket and crude oil is the red one, and they track each other very closely. So this one had to move up to the top of the resistance zone, broke below to the 127.2% extension, now getting a bounce, but out here in the February timeframe is when we are expecting the synced long-term and intermediate term troughs to form. So even though this has switched to positive momentum, it is just very slight, and we would expect a move back down into this range. Here is the intermediate cycle. And you can see that we have a momentum that has switched to negative. Here's our trough is due out in February. I just showed you that also on the monthly chart. And on the daily, you can see that this is actually looking quite bad. We've broken below the cycle low support, now getting a bounce up into this sell zone. So this could be a good shorting opportunity for near and short-term traders. If you start to see momentum switch back to negative on the lower time frame charts, such as the 2-hour chart, this could be a good shorting opportunity into this timing window between 9/3 and 9/11. So with that having been said, XOP may not be able to get much traction going here, and therefore this would show that weakness going into the long-term February timeframe for a trough in XOP, along with crude oil. That's all I've got to show for the charts that were requested.
All right, great work on that. One comment I have, you showed the Intel chart and that big upside move that we had in there. That is because President Trump said that he wants the government to take an equity stake in Intel. And that's because it's floundering so much, and they say it has national security issues. I think it's total garbage. I can't stand it when the government takes any piece of any company, like they did when they bailed out GM all those years ago. So I can't hold back a negative comment on that, and I think there's going to be a lot of pushback on that, and I wouldn't be surprised to see Intel give up some of that gain that it had based on that news. So. It certainly isn't because Intel is doing anything better. They have fallen way, way behind in this world of AI. So I had to put that comment out there. Other than my comment on that, everybody did a fantastic job. So great work on that, Katie. Great work, Arby.
Thank you.
Great work, Slim. All right, so just a quick reminder that our Slim AI is in beta right now. If you're a non-member, a visitor to the site, go to the front of the site. Down over here, you'll see that there is an icon with my face there. Click on that, and you can actually talk to Slim AI, and it's in my voice, and you can have a whole discussion with it. Even if you're not a member, it can give you a lot of things regarding education, tell you about what we offer on our site. So click on there. If you are a member, level 1 to 4, if you go into a member area, like this is our dashboard for the planning hubs, and click on that, then it recognizes you as a member. Make sure you tell it your name so it knows how to address you in the future. And then the amount of knowledge that Slim AI has is just incredible. I've been sending a lot of emails out with information on that, and go in and engage with that. As many processes as you can do with it. If you're in a slump, ask about the Slump Buster process. It's a breakfast club where you check in with them every morning and you set your intentions for the day. It's just incredible. I encourage you to become a member and get the full use of that. And remember, we are in beta right now, so we're shaking out some little issues here and there, and your feedback really helps us on that. So that is Slim AI. I'm going to turn this over to Matt, and he's going to introduce to you a day trader version 3.0, just absolutely incredible. Matt, take it.
All right. Can you hear me okay?
Yeah.
Okay, great. All right. As Slim mentioned, I'm going to be talking about the day trader service. But first, I just wanted to give a quick run through our overall member services for those of you that are new at askSlim. If you jump over to our memberships area, you'll notice that we have 4 core membership levels, level 1, 2, 3, and 4. And how this works is as you go higher in membership level, the coverage that you get to experience from the team expands. So essentially in level 1, you're going to get a deep dive into the indexes with the daily snapshot. There's about 12 charts that come with the daily snapshot, static charts, 2-hour, daily, weekly charts. Then you move into level 2 and you get our complete focus list. So you're going to also receive our trader library. The focus list is in static form. And then you move into level 3, and that's when you start to be able to access our tools, our automated tools, such as the ranking system, such as the MCM, and you'll also be able to then see Katie's cyclo timing tracker. So it continues to grow, and there's RV's office hours that is available in level 2, level 3. And as you increase in membership, your access to these tools and to the analyst team continues to grow. And then in level 4, your utilization of the MCM can expand. You have access to a pro version that has a notification system that has over 250 subscriptions that you can do based on the changing conditions you're looking to monitor. There is some access in level 3, but then in level 4, you also have access to our thinkorswim grids. So those same charts that you're seeing the team utilize today is what you'd be able to experience on your own thinkorswim platform. But the main focus for the next few minutes is going to be our day trader service. So what we have going on with the day trader service right now is a special offer. And I wanted to talk about the day trader service and that special offer. So the special offer is for 3 months. It's 25% off, or just over 25% off, and it's $99. So it's regular price at $44.95. It's basically $33 a month for the next 3 months. Now, what is the day trader service? So the educational objective with our day trader service is to help you learn how to avoid low quality trades. So essentially, you can use this tool to help you stay out of more trouble. And how do you do that? Well, you identify and align with the likely dominant directional bias. So we have a slogan with the day trader service that is, get on the right side for a longer ride. And that's something that Slim came up with, and that is sort of the inherent design of the overall tools here, is that we have developed, and really with askSlim overall, is we want to understand directional bias and then be able to hone in on when those next key swings are going to happen in the direction of that dominant momentum trend that is underneath happening. So we want to help you also remain in higher probability trades longer. So ride that move while conditions support it. So how do we do that? Well, we have, as part of the day trader service, there's a full suite of trade planning tools. We have a Zoom that has our live day trader cockpit. So each day before the market opens, there is a link that's sent out to the day trader Zoom, just like you're logging into Zoom to watch this show. You get to see our cockpit. The cockpit has the impulse monitor. It has an 8-minute strategy grid, and then it has a 15-minute grid that has my key price zones. We call it the price zone roadmap. So it's got an upside where you have acceleration zones. Those are in yellow. And then when you get into the pink, into the red, that's when you start to get into the resistance zones. And then the support zones are down below. There's additional tools that are on the grid to help you with entries and exits in terms of the 8-minute. And then we also have the turbo feature. So as part of the impulse monitor is designed to help you understand, and it is the goal of the impulse monitor is it's uncovering when there is a impulse that's likely either already unfolding or has the conditions ripe for a strong momentum impulse to happen. And then the turbo lets you know when there are thrusts happening within that impulse condition. So the current day trader service is focused on major intraday swings. That's what this is designed for. For those of you that are looking for swings that will last anywhere from, let's say, 30 minutes upwards to even 2 hours, that's what this is trying to discover. Okay, and I'm going to come back to what's happening in terms of what's new here in just a second, just a minute. All right, I wanted to cover, though, the other tools that are available for the intraday traders here. So I talked about the impulse monitor and turbo. I want to let you know that as part of the impulse monitor, I'm going to pull this over because I don't know how many of actually our members realize that we added this in at one point, but we did a survey on what the if there was 20 symbols that you were most interested in seeing, what would those look like from an intraday perspective to capture these larger swings? And we had our members vote on those. Well, we added those in, and this is a standalone feature where you can see the impulse monitor and you can see the 8-minute strategy, which is obviously a shorter duration time frame to help you with some entries and exits and seeing when there's alignments. But the bottom line with this is that you can see right now that I can sort instantaneously on this impulse condition bias, and it'll pull up the strongest and the weakest of these 20 in their impulse condition. So how do you use that? Well, I just talked about directional bias. Okay, so this isn't meant to be used in isolation. As a technician, you always have your charts next to you so that you can evaluate something like this, a bias tool, with the overall price action as well. So this is just one of the charts that I put together, and this has the 8-minute. I picked the 8-minute because that's the strategy grid here. For someone who's looking, I would call this more of a minor swing. So we have major swings, minor swings, then we have our scalp edition. So what I have up here is the ES on the left. So that's the future. I have Microsoft and XLE. Now, why did I pick those? Because when I put this together a little earlier and I was sorting on the impulse conditions, which ones were most bullish at that time, Microsoft came up as bullish with the turbo on, and then also XLE. And so what's great about the impulse monitor is you can take these symbols, plug them into your chart, and see what's happening. And again, what's the goal? The goal is to catch that next swing that is likely underway. And we believe that you want to be in that dominant directional condition where you have alignments, where the directional components are strong, and that's where you're going to see the biggest swings. And that's how you stay out of trouble, is that if you're looking for the larger swings, unless you're calling that perfect top, there's a higher probability that, as in this example here, Microsoft and XLE, in terms of an intraday move, this is one day, you're going to see this has been in an uptrend. And that's what the impulse monitor is designed to do, is keep you in that directional dominant move. So this is all part of the current collection of tools, comprehensive tools that come with the day trader service. Something else I wanted to show you very quickly here with the day trader service, because it is extremely comprehensive. That was the impulse monitor. It has those 20 symbols that you can sort and rank based on the impulse condition. And then there is the link to the cockpit. So that is where you get to have that Zoom. And I have that Zoom open all day long. So if there are questions that you have, it is meant to be an educational opportunity. I'm not calling out anything. That's not what it's for. It's meant to give you a setup. This is a professionally curated setup that we've put together, and you get to see what that looks like. But if you have questions, you can post those, and I'll do my best to answer them. If I can't answer them right away, I'll get those responses in within 24 hours. But again, I'm not there to make calls on the market. We also have a very, very helpful strategic tool here, which is our replay system. So what this is we have a software piece that we developed where throughout the regular market session, it's taking screenshots of our day trader cockpit. And you can see here as you go, so the market opens at 8:30 Central Standard Time. Our impulse monitor is on the left, and that stays gray until 8:40. So we let the market settle a little bit. And then what it's doing is taking screenshots every 5 minutes. So every 5 minutes, you have screenshots, and you can go forward and backward in time to see how the market plays out relative to our indicators. You can think about your own strategic approach, but it's a fantastic, again, strategy tool that you have at your disposal. And we try to capture every day those screenshots. And you can go back in time and look at all of that price action. So that's also part of the current day trader service. And then obviously we have resources. So there have been a number of webinars, videos that have been done by Slim and myself. And there is really a complete library where we've talked about the service in great detail. Yes, it is going to take time to learn it, just like anything else. You're going to have to put some effort into it. But once you do, you'll really have a new edge and a new perspective on how to look at intraday trading, especially from a swing trading perspective. Now, I'm going to get back to what's new. So what we have coming, this will be rolled out, as it says here, this is launching next Tuesday. 8/19, we're launching our trader radar indicators. So these are, as you see here, these are going to be swing bias histograms. Okay, so we're going to have 3 different time frames. There's the major, the minor, and scalp. Now the scalp is going to be only for our new cockpit, Zoom cockpit, which I'll talk about in a second. But these histograms are designed. We have multiple indicators have been built in. RV and I worked on these for several weeks to put together these indicators to help with bringing a new perspective to intraday swing trading. We're bringing in another time frame on the cash indexes for the Zoom, which is going to be at a minor time frame. For those of you that look for trades, let's say on the S&P, that might be 5 to say 12 points. That's what that time frame is designed for. So we have the major time frame where you might be looking for 12 to 20 points. And sometimes when we catch a big swing, might be 20 even to 50 points. Now those come maybe a couple, 3 times a month, but when they happen, you can bet on it that our impulse monitor is going to be picking that up. So this new histogram is really going to give you a feel for that directional component, very clearly that the color, the shifting of colors. You can see here as we go from a slightly bearish. So there's multiple colors. I will have a glossary. I'm going to give a full hour review of the new tools. But you can see as this shifted here from that slightly bearish to then a warning. This is the warning, which is the yellow. And then where the shift occurred when it goes gray, and then you can see the bullish momentum kicks in, and away we go on a rising move here, as an example here in IWM. So this is going to be part of the new day trader cockpits. So we're going to have 2 cockpits that you'll be able to access throughout the session, just like you do today. If you're a day trader member, and just like you did today to access our show, you went to Zoom. Well, on Zoom, they give you the ability to have tabs. So what that means is there's going to be 2 tabs. We're going to have 2 live day trader cockpits. The first one's going to be the cash indexes that have the major markets, the SPX, the NDX, and the Russell. And then we have the 8-minute, which is going to have the index ETFs. So you have the SPY, the Qs, IWM, and DIA. And then this is something that people have been asking us for years. We are going to bring in a multi-panel cockpit grid. We're going to have a 15-minute, an 8-minute, and a 3-minute with our new trader radar histogram indicators built in for all those time frames for the futures. So ES and NQ. You're going to have access I'm going to go live with those around 7 to 7:15 a.m. And then we'll shut them down probably around 4 p.m. So you're going to be able to see that live futures data relative to our setup, right? So this is an educational Zoom setup, so you can see how a professional trader would establish their cockpit. That's what we're trying to do here, is give you a bird's eye view into our world and see what that looks like, and you'll be able to view that as well. That's not something you'll be able to control. It'll be a Zoom educational webinar, but you will be able to see it live. You'll be able to ask questions. I'm not making calls. You're there to see the setup. Obviously, I'll be providing best practices. Super excited about this. This will go live next Tuesday. All right, an important note, if you're currently a premium member, levels 2 through 4, you're going to receive 2 weeks free of the day trader service, including the upcoming enhancements. So I'll be sending out an email today if you, as a reminder of this. Also, if you didn't catch the show, you will have that. If you're brand new to askSlim, either way, it's going to be an incredible offer, 3 months, $99 for the day trader, or you could join and you'd get 2 weeks free if you become a premium member. If you have questions, write to me. Very excited about this, put a tremendous amount of effort into it. What we've built already to this point is fantastic, and this just adds a whole nother level to this program that people have been asking for a long time, and that is, can you give us something for more active traders? So we had a message that came on from a member who said, well, what can I do if I'm a scalper? Well, now you're going to have more time frames to work with, because today's setup is really for those larger swings. It's not designed for catching those reversals. With the new setup, especially if you're a futures trader, absolutely, you're going to see opportunities where you can see those those changes happening, those conditions shifting at that 3-minute time frame with our new trader radar. All right, that's everything I have for now, and excited to roll this out. If you have questions, reach out to me. Back to you, Slim.
Yeah, great. There's a couple comments in there. One of them I started to answer by typing it. I sent it too soon. So somebody with a level 2 membership wanted to know if they wanted to pause that and then try day trader. Can they do that? And of course, they could do that. All you have to do is write team@askSlim.com and they'll handle
Yeah, if you
any
have any
membership
membership
changes.
questions, just let me know what you're thinking, and we'll try to accommodate. But the bottom line is, if you're currently level 2 or 4 core member, you'll get 2 weeks free. After that, we'll provide you with the same special offer. If you're not a member at all, become a member. You can get 2 weeks free. Or if you're just a day trader, you have an incredible offer here for $99 for 3 months.
And somebody asked, do you have to have Thinkorswim to benefit from day trader?
You do not. For the cockpit is via Zoom. And then what I showed earlier, these pieces in terms of the standalone components, right, where I showed the impulse monitor, that is something you can access directly from the askSlim website, or you're inside of your dashboard. The cockpits are via Zoom, so you do not need Thinkorswim for that. So no, you don't need Thinkorswim to maximize the day trader services.
Okay, great. Absolutely unbelievable amount of work that was
Yes.
put in there with some just great ability to have increased a way to improve your trading for the short term, intraday, and especially for the scalpers.
That's right. If you're a future scalper, this is going to be awesome.
Yeah, right. Okay, great work on that. We're going to move forward. Let's take a look now as we move into the stock market analysis. Always do read this slide. It does tell you about our approach to analysis and the important aspect of trade ownership. You have to own your own trades, no matter who gives you any kind of information. It's all about you managing your own risk. All right, stock market brief this week. Well, you know, despite the fact that we have a pullback going on here on Friday, the stocks do remain very strong. And that's despite some worrisome inflation signals. The CPI, it was higher than expected. However, it was tamer than the worst fears. So the market didn't really react to that on Tuesday. On Thursday, there was a shocker on the PPI, up 0.9%, and that did trigger a brief sell-off. But the market did come back after that, and the buyers certainly are still in the market, even though they're, I think, approaching it in a different way. Rate cut is still expected for September, though the half-point move is likely off the table. The markets have removed that, and looking like as of yesterday, it was a 93% probability of a quarter-point cut. And about a 7% probability of no cut. So that's what the markets believe. Huge government spending. I mean, if you didn't see the news, our government is adding $8 trillion to the deficit every 150 days. It's very tough to get big declines in interest rates when they have that much borrowing to do. So even though I think that you'll probably get 1 or 2 cuts this year still coming, without a deep recession or a very fast decline in the stock market, it's not historically true that they're going to be able to cut rates based on how markets act and based on how the huge borrowing needs for the government are going to be there. Basically, conservatives have left the room. There is no fiscal restraint at all, as the government is spending just as quickly as it ever did. Based on all of that, the dollar has softened and crypto has surged. That was led by Ethereum benefiting very much by the stablecoin bill. I think Bitcoin is in trouble. There's a lot of people that would argue with me on that. But certainly Bitcoin relative to Ethereum, we called this out a month ago. where we said we thought Ethereum was going to well overperform Bitcoin, and that did happen. I still think that's going to happen in a very significant way. And earlier in the show, we looked at MicroStrategy, MSTR, and that stock has been sliding and looks very negative. And I think that's a canary in the coal mine about Bitcoin. That people realize that if Bitcoin had a benefit regarding the potential for a utility of moving money around, well, that's now gone. I mean, it kicked that leg out because Ethereum and everything built on Ethereum is going to be much better for that. And everything around Bitcoin about that is much slower and more expensive. Investors, well, it's a rotation. AI stocks are stalling, and small caps and value stock names have gained traction. We've seen them start to move up. Interesting. I saw RV made a comment earlier in the week on jets, and I took a look at that. And that's the one thing, the airlines that are moving into that. There's about 5 or 6 airlines that are in the small cap category that are in the Russell. And so the Russell has benefited from that definitely. NASDAQ up fractionally for the week, S&P up about a percent, Dow up a little less than 2% right now, and the Russell up more than 3%. So you get a real good idea, and that's at noon today on August 15th. As far as the what's going on in the market. So buyers still very clearly in the market, and our momentum indicators have been calling that for weeks and weeks and weeks as they turned positive back in April and have remained positive since. That's a look at this week. Well, now we're going to look at the stock market. We'll look at the S&P 500, NASDAQ, and the Russell multiple time frame analysis. And we'll take a peek at the MCM, the market condition monitor, and see what that's telling us and which are the strongest and weakest stocks based on the built-in algorithms that we have on that. So let's take a look now as we switch over to the stock market. I want to start in the Russell for a couple of reasons. First of all, the Russell is the strongest, and the Russell is really dominating the small cap, mid cap category. Is a cyclical pattern that is now dominating the action in the other indexes. So I'm going to show you how that works. This is the weekly chart in there, and you can see that there was a mid-cycle low due somewhere over here, and this is where it appeared right there, just a little bit to the right side of ideal. This one you could see came just a little to the left side of ideal, and this one over here just a little bit to the right side. One of this or this, not sure which it is. And the dominant cycles are pretty clear in there, as you could see right there. And that calls for some upside potential still in here, and then somewhere in here, a correction out into October, which is very much in alignment with what we're looking at in the other indexes. So if I compare over here, and you could see that the momentum in here had flattened out for just like a week, but then started to move up again. This is our reversal scout level 4 indicator. And this is the slim ribbon, and on the bottom you can see the slim ribbon PO, which went neutral after being positive for that whole period right in here. And all of those signals that we're saying upside momentum resumptions, those arrows that you see in there. And then it went neutral and actually has gone positive again. Option bias indicator was positive this whole time, and now it's gone neutral. So there's a little bit of deterioration that is coming in there, even though it is the market leader. If you look at this cycle right in here, this is a 16-bar cycle that has been pretty consistent in here, and that is dominating the other indexes, which has basically 18 to 20-bar cycles that keep reoccurring. This is the upward turn in momentum, and this is support into this area in August. This says to me that, you could see you had this gap down and it's getting a little sloppy in here. Maybe this pulls back for a week or so, choppy sideways, but if it gets into this area, 2260 down to about 2215, that would be a buy area for me. That would say, this is the place to start looking for the long side again. Right now, maybe a little bit of a correction based on the duration in here of the cycle. You can see right now, this is about 10 days off of this low. So somewhere in here about in the next 5, 6, 7 days, you'll probably make a trough in here and then begin to move up again. We don't really show any kind of a decline in here other than this declining part of the phase, because all of this is positive here. Everything that we look at in here in the Russell is positive. And as we talked about the rotation in stocks, I think that the rotation that we see is certainly showing up here in the Russell, as the Russell is strong. Breadth figures have gotten stronger, and the numbers as far as a breadth dominating in the Russell, I think, is important, because that gives you a good sense for the fact that there's a rotation, and declines probably won't be able to last very long. So that's the Russell. Now, remember this 16-day cycle in here, because it's going to show up as an out of phase on the S&P 500. And you can see that right in here. So I have this green dash, and that's that Russell in there. And we were looking for a minor trough to form in here a little bit later, based on what I saw in here on the S&P 500. But this is what happened, because, and that green dash shows you when the Russell took over, then it was dominating this cycle in here. So we keep the out of phase cycles in there so that we can see how they perform together. They don't always move together and in phase, especially when you're talking about small cap versus high cap. So we're noticing that the Russell is the dominant pattern in here right now, as you could see right in here as it moves up. And we're expecting at some point for this 18 to 20-day cycle, which has been around for years, to show up again. So we'll keep them both on here for right now. It doesn't matter, because the slim ribbon is bullish. The slim ribbon, the option bias indicator, is bullish. And you can see in here the slim ribbon PO, all bullish. Everything in here telling you, as it rides the support of the slim ribbon on the upside, that that is a bullish condition that we're in. And we're just illustrating the effects of the Russell and the 16 bar on the S&P 500. So that was the minor trough. The principle of synchronicity says that the minor trough will occur on the weekly chart at the same place that the minor trough occurs on the daily chart. Well, the only way that that happened was because it happened on the Russell. So essentially discovering and seeing how the Russell was making sense here is how we knew that this was a minor trough that was important in there. And that was very much after the fact. I can't tell you that I did any brilliant analysis in there. I just had to wait for the markets to tell me what these conditions were. They certainly stayed positive. You can see in your S&P 500, this reversal scout is just so fabulous. Look where it turned positive right over here in April, and it's been positive ever since. This is the dominant influence that is influencing this daily chart right over here. That's what's so important about multiple time frame analysis, and we teach that in the cycle analysis workshop. Go to the top of our page under workshops and watch the free video, and you will learn a lot. So that's the S&P 500. The NASDAQ is very much the same as what we were looking in here. Sorry, and the X is the NASDAQ, and we'll take a look at the cyclical pattern here. Very much the same driving force there on the upside on the weekly, and the overlay of the Russell in here as it made that bottom there on that 16 bar cycle, and momentum just incredibly strong. So we'll look, this is that period where we talked about in the Russell for a little bit of a dip and then moving up again. That allows for this stock market to get a little bit of a dip and then likely moving up again. You can see we're projecting up here to what is this fib extension there. That's 24,300 approximately. This fib extension, 24,275. So that's where it kind of comes in right over there. As where you could get, a good upside movement in here. So if this corrected down in here into that 16-day low for the Russell and then started to move up again, then that would all be very much in sense with the rhythm that we see in here in the stock market. So NASDAQ and the S&P 500 influenced by the Russell, which makes sense because investors are moving out of the higher caps and into things that they see as value that have been possibly missed. You can see that if you look at, there's even some upticks going in the energies. We talked about the jets, the defense category. Those are moving up. So they're looking for value and looking into some of the lower caps, and that's what we see in here is that influence is going to probably keep the market moving up until it gets into a bigger corrective phase. What is the bigger corrective phase? When would that come in? Well, you see in here as I look at the period out into this October, November, this is where there's likely a bigger decline coming in the stock market. We're not even really positioning for that now unless you're a long-term investor because the risk rewards based on valuations are insane. So I certainly have moved my equity exposures way down. And you can see what happens as you get into a lot of these periods where they nest on the downside and you get these bigger declines that you can see here and here. This one only gave you a modest one there, but then of course you had this huge decline right over there, and you get this period over here where it's likely to get a sizable pullback. But there's no reason for us to even consider anything bearish. Now, everything I look at in here on the NASDAQ, on the S&P 500, and as I showed on the Russell, is all super positive. Let's take a look now as we look at the market condition monitor. This is our proprietary tool that you get with level 3 and 4 memberships. And let's just go here to the S&P 500, QQQ, IWM, Dow. You can see in here as we can dial in the different trader types. We're looking at short term right over here. And this is all bullish, as you can see right over there. If I go to intermediate term, which is for the longer holders, position traders, in this case, the IWM and the Dow are only slightly bullish, but they did improve 2 days ago from neutral to slightly bullish. So there's an improvement going on in there. QQQ turned very bullish on 8. I'm surprised by that because we've started to see some floundering going on. So if I go down to the near term, which is looking over the next few days right there, here's where you can see these things starting to give up a little bit of ground in there, but the Dow is very bullish, as you can see. So you can get a good idea for intraday traders how you can use that as we see the Dow much stronger than the rest of the market today. Let's take a look here as we look at the trade setup conditions in here and just try to get an idea of top 10 in either direction. We have what's going on is gold and silver are consolidating, but investors are looking for value. Look at this. They're buying the junior miners there like crazy. So they're up to their highs right now while the metals are floundering. I'm chomping in the bit for a downtick in here in this group so I could add to positions in there. But they're buying the junior miners. Google is very bullish, as you can see. I don't get that one. Part of me says that their ability to monetize search is getting cannibalized, getting eaten up by AI, by other companies. And I think some point we're going to see that and hear about that in Google. But right now, my opinion doesn't matter because it's very bullish here on the short term. Here's Chevron, which is getting some upticks. Again, this is the market looking for value in there, kind of a cruise line joining the airlines moving up. Nucor, you can see that, FXI. So China is very bullish in there, and that you'd expect Baidu to be giving you the same kind of a reading. Ulta Beauty, Tractor Supply, I go shop in there for birdseed now and then. And you can see Crane right there, all of those very bullish. So let's take a look at what are the very bearish in here. And you can see that you have iPaper, corn, of course, and wheat in terrible shape. Those of you that are grain traders, soybeans turned up in a positive phase today. While the overall pattern is not great, it's right on time. So soybeans had a nice upward turn in here. And you can see the other ones in there that are very bearish, not many, and then you go into the bearish ones right over there. So that's the great way that you can use the market condition monitor and give you a very good sense for that. Bullish conditions overall, the second and third tiers of the market driving the upside, investors looking for value. No reason, no matter what we look at as far as that period out into September, October, November, where the market could be weak, no reason to consider that yet, because everything right now is still looking extremely positive. So that's a look at everything I want to show you. If you're just watching the YouTube clip right now and you didn't see the great presentation that Matt did on our day trader service, we're upgrading it now, Day Trader 3.0. It's mind-boggling. You get our impulse monitor, keeps you on the right side of the big moves. Our Day Trader cockpit, which now includes the great trader radar on the futures all the way down to 3 minutes for scalpers, and our replay system where you could play back the whole day and see how you could have set up your trades. Just fantastic. This is what so much of this looks like. And at $99 for 3 months, this is just an unbelievable deal. You're going to absolutely love that. Just go to the top of our front page, click on this special offer up there, save 25% on Day Trader, and you'll be able to get in more information and sign up for that. Of course, write to Matt at askSlim.com if you have any questions at all on the Day Trader. If you're new to us, learn from this group of pros and learn from our new Slim AI. Just click on that on the bottom right of our pages, and you'll be able to talk to me essentially, or my virtual twin who speaks in my voice, and you can just type in there also, and it'll blow you away when you consult or talk to Slim AI in beta right now. Team, that was everything I had.
Great work, everyone. Great show.
That was a
Always
really
fun.
interesting presentation.
Yeah, thank
Awesome.
you. Thank
Thanks,
you. I
guys.
thought it was good.